Thanks for having us. This is always awesome to chat about this kind of stuff, and especially what an important period we're in the crypto markets when not only is Bitcoin in a bear market, but you have exchanges that are failing. People are losing money not by betting against or betting for crypto, but actually because of the exchanges and stuff. So I did not have any exposure to FTX. I've always been a little bit of a cautious one in relation to where I put my money or how much money I have on the exchanges. So I was very lucky in that sense. But honestly, I mean, it's partly shocking, I would say, but at the same time, for someone who kind of has paralleled the dot-com collapse, and actually recently I've been really talking about the parallels between Lehman Brothers collapsing and FTX collapsing. It's not surprising when you see these type of risk taking that was going on in crypto, and the lack of regulation and transparency. It's not surprising that certain individuals are going to kind of take shady approaches or leverage themselves out too much, thinking that they're invincible, especially when you deal with, a younger demographic that's running these companies that hasn't been through some collapses in other industries. So I think, for the most part, it's sad, it's horrendous, but I think on a positive note, you have to start looking and saying, okay, this is going to bring some of the reforms in that will make big money and even myself feel better about investing in cryptocurrency with larger amounts of money. And one thing I
Yeah.
would just add is that, I mean, it's no consolation to people that are losing money, and it's a horrendous situation. But what we have to remember is that every collapse, so there's always bad actors, right? Unfortunately, and especially in unregulated areas. And if you look back at the dot-com era, there was bad actors that when things collapsed, there was shady things. I mean, there were people that were doing pump and dumps. I mean, it's so similar and being over leveraged. And then you even had like Enron and WorldCom type things, which were in the stock market, and they were billions of dollars there as well. And they were totally fabricating. And when there were collapses, that's when that stuff came to light as well. And you go to other things, and now we're in crypto. So unfortunately, it's a issue that when you have these unregulated scenarios, people do take advantage and they need to be punished. And as crazy as it's been, where a year ago I still remember talking about how you needed transparency in crypto and regulation, and people were just like, no, you can't do that. But I think honestly, I can't imagine anyone saying that at this point. The worry is that they overregulate, but the question we have to ask ourselves is, would we rather no regulation or a little overregulation? And I think at this stage you have to say, you have to have audits. I mean, there has to be a structure where the investor feels comfortable having their money on an exchange, right? Because, you know, I always say this is like, it's hard enough to invest in a coin or in a stock and like make money, but you shouldn't have to wake up each morning wondering if your money's going to actually be on the exchange or not. Like, has it just vanished? And that's where we are right now. And it's going to take some time. Like Aaron said, like Moon and Papa said, is that you have some healing that's going to have to go on, some trust building that's going to have to go on, and you're going to have to get some regulation in there to make it more clear. So for me, again, and being more of a swing trader, I don't have a whole lot of money in on the exchanges, but I do have money on the exchanges. Mainly, I've gone with like Kraken and Coinbase, and I'm hopeful. I hear Kraken gets audited 2 times a year. I hope that's true. But and they hold their reserves 1 to 1 supposedly. Coinbase, I'm hopeful. I chose them mainly because they're publicly traded. I assume the SEC at least has a little insight into them, and hopefully they're a little safer. Although again, nothing's safe necessarily in crypto. Nothing's 100%. But yeah, mostly swing trading. Although I will say I actually put 100K back on the exchange, and picked up Bitcoin. I basically have said this for a long time that once it got below 20, I would start kind of inching in, dipping the toe in the water on what I would consider to be a longer holding position. So that's kind of the first move I've made. It's counterintuitive. Everyone else is panicking and pulling money. I'm kind of beginning to put a little bit on there. I would consider it about a 1/6 position, meaning I'll add 5 more times every 3,000 down on Bitcoin. As of now, that's the only one that I'm willing to hold. Although I would consider Ethereum if it got down sub 1,000 again to start doing the same thing every 200 down or so below that. But again, the idea is that for me, I don't trust any of the other coins. I do think that Bitcoin and Ethereum probably outlast this winter that we're in. And honestly, in terms of cold storage, I feel like I'm my grandmother when she first was trying to learn the internet. I don't trust myself with keeping track, or if my kids put it in the toilet, or I don't even know what's going on there. So for me, it's just like, you know what, I'll just keep a little money on the exchanges, just what I feel comfortable with, and I try to choose the best ones, and I'll stick with that for now. So I would echo that, it is kind of interesting to see that Bitcoin has stabilized, although it is on a technical base, it is making a bear flag. So I do expect further downside. For me, I'm still expecting 1213, where you should get some sort of bounce. Ultimately, I've kind of revised my downside target. I was kind of in the 1213 high end and then 3500 low end. I've kind of now isolated in where I think it looks to me, based on some factors, that it's the 9,000 level is kind of where I expect a bottom potentially. And again, there's no guarantees. I certainly have been wrong before. I'll be wrong again. But that's kind of where I'm isolating down. I think max pain for a lot of investors will be that 10,000 break point. A lot of stops will be triggered there. A lot of people kind of just throwing, the towel in, which is usually in bear market collapses the trigger for a bottom. You get that kind of maximum fear out there. I don't think we're at that yet. I think you're at a high level of fear because of FTX, but you're still not at that point. So that's kind of where I am. And again, for me, the 9,000 comes from a trend line. If you connect a trend line from before the 2017 run to the lows of 2018, 2019 bear market to the COVID lows, there's a trend line that slopes up beautifully that kind of is right around 8,300 right now, but it's upsloping. So you figure in 5-6 months, it'll be around 9,000 or so. And then I was kind of comparing it to Lehman Brothers in terms of, the exchanges are kind of like the banks of crypto, and Lehman Brothers collapse. And what I noticed is that the S&P, it took the S&P about 5 to 6 months from the Lehman collapse to bottom out, which gives me some sort of horizon for when crypto could finally wash out and get all this kind of junk out of it. And then I looked at the discount, how much the S&P fell, and it was about 45%. So it kind of puts us right around that 10 or just below that 10,000 level as a potential downside target. So that's kind of where I am right now. And again, I told you guys just before that, I started nibbling a little bit because one thing I've learned as a trader is that I could have the best target in the world. It may not get there. And so for me, it's just kind of, slow and steady, accumulate slowly every 3,000 down. I'm even anticipating and leaving some money there in case I need to buy below 9,000 if it goes to 6 or 3 or whatever. But for me, yeah, I think that's where I'm at this point. Um, let's see. So for me, anyways, I'm kind of in the camp where there's a chance that the dollar made a high, that it will last for at least a few years, maybe longer. I'm in the camp where I'm watching this high pivot that we put in a month or so, a couple months ago on the dollar, thinking that you now have a position where the CPI and PPI are starting to come in, which shows a little bit of a give back on inflation, a little bit lower rate of inflation. And if I'm correct, I think that the economy is going to slip into this pretty bad recession. It's going to take a little time. They had to tell us there was no recession, up into the midterms and all that, to keep the good vibes going. But I think we all know, especially just tune into CNBC every day. It's like, oh, Microsoft's laying off 20,000. The latest is Amazon's laying off a bunch, and Meta and all these. So it's coming, right? It's coming, and the shock to the system of these massive interest rates is going to slow the economy. And so what you'll see is you'll see this rhetoric from the Fed, and they still probably hike 50 or 25 basis points in December. But my guess is they're going to have to pretty quickly go to zero hikes. And then there's going to be this weird vibe going with the Fed where the inflation numbers are still going to be elevated. They're going to come down, but they're still going to be above the long-term 2% range that the Fed wants. But the economy is going to slip into this pretty bad recession. And the problem is going to be is that the Fed is going to be very reluctant to lower rates and print money again, because obviously they've just gotten burned and proven wrong again. No transitory, we know that. And again, this is just, keep in mind, this is a long list of the Fed just being horribly wrong on so many things. But every time they're wrong on something, they seem to go the opposite way and get hard-headed. Just like when it wasn't transitory, they played catch up and have now jacked rates up to pretty ridiculous levels to where you're seeing the housing market basically collapse. along with other things as well. So I'm in the camp that if the economy starts to really go into a recession, it's hard to imagine the dollar would gain traction on that. The only potential for that would be is if you saw this like a global depression, right? And then it's, well, which place is still the safest or the least dirty shirt on the in the hamper kind of thing. So again, for me at least, I'm still eyeing gold. I still think, considering the uncertainty that the future holds, and if I'm right that you're going to see a pretty bad recession, earnings for stocks are going to go down sharply, which is going to make the stock market continue to go down. And that doesn't leave many investments left, right? Where are you going to go? You're going to go for gold, maybe other commodities out there, although oil is going to drop too if the demand is if demand destruction's there. And so then you're left with gold, maybe some silver. And then again, my hope is anyways that when you get low enough on crypto and things get bad enough in the economy, then you have this kind of pivot where at a certain price with regulation and transparency, you start to see money coming into Bitcoin when things are bad versus the risk asset, how it trades today, which is it trades with stocks generally. So at least that's kind of where I'm looking for, is like, it's not yet in Bitcoin, but I hope that pivot is, 6-12 months away. And then that for me, it's still gold is a favorite of mine to at least protect my assets. If you ask me where do you sleep best at night, there's no doubt in gold I sleep the best right now.